It's not every day that a Canadian industry gets completely rocked by a news story where we have competing hostile takeovers. You have boardrooms across the country fighting each other, going on to podcasts and news stories talking bad about each other. You don't get that kind of action here in Canada. Our stock markets are usually a little bit sleepy. While there are good opportunities for investors, not usually the coolest news storylines. However, we have had one really interesting storyline going on over the last couple months. It's all about a company called MEG Energy and what's going to happen to them. Today, I'm going to break down all of the news events going on, specifically what changed this week, how this has been shifted completely, and how we have these two competing groups of investors who are now looking at a third group, and there are lots of opinions all over. I want to break through some of the noise, show you guys what exactly is happening, give you some of my opinions on what this means, both for the companies involved and for the industry in general, and of course, talk a little bit about how this might impact my positions in the Canadian oil and gas stock space. Welcome to Golden Larch Investing. My name is Liam. We're talking, of course, about MEG Energy, talking about how Cenovus stepped into the ring this week. We're going to talk about Strathcona Resources. We're going to talk about some of the news storylines that have come out since we last covered this, how we've seen a lot of sort of chatter coming out from both sides of this argument, and I'm going to give some of my opinions on what's really happening here. I'm going to start with a really nice recap of this whole story for those who haven't really been following along. To give you a very, very brief overview, MEG Energy is one of the smaller Canadian oil and gas producers. It has a specific blend of assets that are really good for longer term investors because these are very, very sort of upfront cost intensive and then can just produce at the same level for a super long period of time. It's a classic kind of Canadian oil sands style investment. And it's really in demand right now with all of these dynamics in the market. However, they're a smaller company. You can have your arguments about how well they've been managed. And to put it simply, investors haven't had a great result in the last 5-10 years. So a lot of investors have maybe been looking to outside sources. Now, an outside source did step into the ring looking to buy this company in the not so distant past. That was Strathcona Resources, led by a guy named Adam Watrous. To give you a little overview on them, Adam Watrous is this big sort of legacy Canadian investment name. He's almost a legendary figure in Canadian investment because he came over from the banking world into the energy world. He has all these ideas about how Canadian energy should be run, how to unlock value for investors. He runs a Watrous Energy fund, which owns most of Strathcona Resources. He used this to buy a bunch of MEG Energy shares. I think it was about 10% that he purchased originally. And then he basically put up an offer and he said, hey, we're willing to buy this company at this price. MEG Energy's board of directors said no. And a big part of that argument was because the price he offered was too low. Then we get to the other side of the argument here. MEG Energy shareholders who are not happy with Adam Watrous, not happy with his offer. They thought, hey, that's a way too cheap boost, right? The longer term value of holding the stock is far more than the 9-10% you're giving us right here up front. We're not getting value out of this. No, we won't sell you shares. And we've seen some big figures from that side of the argument come out. You know, they've done podcasts, they've been on BNN, they've been sort of in print media, they've been just putting their name out there, putting their face out there saying, hey, you shouldn't sell your shares to these guys. I think probably the biggest name on there is Eric Nuttall. He's a guy we talk about here on the channel quite often because he's another not legendary figure, but very vocal figure in the Canadian energy investing space. So you have these two guys sort of opposed to each other and investors on both sides sort of making these counter arguments. And part of the problem from the perspective of these MEG shareholders was that Strathcona Resources offered to buy shares anyways. They said, hey, okay, the board of directors doesn't want to sell to us. We don't think they're doing a great job of unlocking value for shareholders. We own about 10% of the company, 9-10% already. So we're invested in this thing, like it or not. And we want to see a better result. So we're going to offer to buy your shares off of you individual investors, off of you, institutional investors, whoever it is. You own shares, sell them to us. We'll give you this premium right there and then. Now, I don't know exactly how that story is played out. It's sort of happening behind closed doors. We haven't seen reporting saying exactly how many shares Strathcona Resources has bought. Have they accumulated a significant chunk or not? But the big news that came out this week was that now there's a new company stepping into the ring, and it's Cenovus Energy. Now, a lot of people said that Cenovus Energy was an obvious partner for MEG Energy because a lot of their assets are quite close together, and Cenovus bought Husky Energy, who once upon a time tried to do the same thing to MEG. Tried to do the same kind of hostile takeover that Strathcona is going for. In this situation, Cenovus is doing what's called a white knight move, or is theorized or speculated to be doing this. And they have until Monday, which is tomorrow as I film this, they have until Monday to put an offer on the table, which is maybe part of the reason why this story has been sort of percolating for the last week, where people have said, oh, maybe this is happening. Then you said more definitively it is happening. And then we got this BNN article that I've got right beside me where they say that there is a bidding war going on. And you've got these big investors saying, yeah, this is definitely happening. Let me take you through some of the main points they put on here and how it has changed the story. So one of the big things that is going to sort of change the war or change the story, I guess, is that there's an idea that Cenovus Energy is going to come in above what Strathcona Resources is offering. Now, this is good for MEG Energy shareholders and theoretically bad for Strathcona Resource shareholders. It's good for MEG Energy shareholders because if you have not sold yet, maybe you're going to get offered a premium to sell now. And in this case, maybe Cenovus could pull away some of the demand that was going towards Strathcona Resources, people who are willing to sell their shares. Again, we don't have very clear visibility on how many shares Strathcona Resources has already purchased. It also might end up being good for Strathcona Resource shareholders, however, because Strathcona Resources on a podcast, Adam Watrous went on a podcast with Amber Canwar at the Calgary Stampede, and he said that if they don't end up buying this company, they're going to give out a huge special dividend to shareholders. I don't know if he said it was 10% or $10, but he mentioned one of these figures, like a big figure, and it actually had an impact on the stock price, which is something we'll sort of peep at later. MEG Energy urged their shareholders to reject that Strathcona offer. So theoretically, they might be more into the Cenovus Energy offer, but we don't know. We haven't seen this put on the table. So we don't know for sure that it'll be good enough that the board will take it. Might be good enough, though, that investors individually will be willing to share their shares, sell their shares there. There is sort of this, this argument going on all over about like how hostile is this? Is this really a negative move? There's a lot of people sort of going at this, like taking a side and saying, hey, I'm going to own shares and I refuse to sell, or I own shares and I'm definitely going to sell, or I'm going to buy shares and use it as an arbitrage opportunity. There's a lot of that story going on. I actually heard a lot of sort of bigger institutional investors say that this is going to happen, that Strathcona would get the shares because of the arbitrage opportunity, which of course closes basically as soon as the market hears about it, but there's going to be some shares moving. And it's really interesting. Again, Monday's the deadline, so we're going to see something by tomorrow. There's a couple of things in here that might make this an interesting offer as far as Cenovus shareholders. We got a lot of people here who might own Cenovus, or at least have talked about owning Cenovus. We've mentioned the company a good number of times. A lot of Cenovus shareholders are real mad at management right now. Just to put it really, very, very layman's terms, shareholders do not like what management is doing. A big part of that has been their sort of downstream operation. So not actually the production of oil, but their refining business. It has not had the same kind of efficiencies as their peers like Suncor or Imperial Oil, who both also own refining businesses. They just haven't really been there. I recommend you check out either the videos we've done on that topic, or there's like a million articles talking about this, where Cenovus Energy is, a value opportunity. Yeah, if you look at it on paper, you're like, whoa, look at the assets they own. Look at the, the sort of opportunity they have. If they could just get this refining business into a better spot, it would be trading at a way higher multiple. I have seen conflicting reports from Cenovus shareholders. This is in the comment sections of articles, it's in the comment section of videos, places like Reddit. And Cenovus shareholders seem a little bit split on this. Some of them are saying like, oh man, this management is going to make this acquisition. Part of the story there is that Cenovus is looking for money to borrow to make this deal. We actually saw an RBC sort of statement saying that Cenovus had reached out to them, RBC, looking for the opportunity to borrow money in order to complete this deal, which I think is really interesting. You think about that statement, what does that mean for shareholders? Is this going to be a mainly stock transaction? Is this going to be a mainly cash transaction, right? That fueled by debt? I think there's an interesting sort of question mark there. And then if Cenovus does borrow a significant chunk of money, what's that going to do to the shares, and what's that going to do to the company in general? They've already got, not the most insane amount of debt, but they're not quite as well positioned, let's say, as maybe a larger company like a Suncor or a Canadian Natural might be. The one thing they do have going for them for sure, though, is geography. And that's the sort of side that I've seen shareholders that are positive on this say is there's nobody better positioned to take over things like the Christina Lake assets than Cenovus, who literally are like the next door neighbor to the MEG Energy assets, right? If you think about this, if you imagine it's sort of a single property, right? You picture a typical, home property. It's basically they're the guys on the other side of the fence. They're right there. So it would be a much less capital intensive ordeal for them to take over the assets because they're literally right there. You'd have to walk the 25 steps or whatnot, right? From property to property. Now in real life, obviously we're talking a much larger scale and there's always going to be costs, but maybe it'd be less for them and it'd make more sense for them than a much larger company. So we're really going to have to see. I could see this going a couple of different ways. And to sort of speculate a little bit, I'm going to jump over. I'm going to show you guys some charts. So here on the screen right beside me, I've got a stock chart showing the last 3 months of performance of all three of these companies. So you see Strathcona is in purple on the chart there. I've got MEG in orange. And I've got Cenovus in green, kind of light green there. And the 3 month chart is really interesting because it shows kind of from that base point, right? That mid-April, late April panic moment when we had all the tariffs going on and we had OPEC dumping barrels and, oh my God, oil industry's doomed and Canada's doomed and everyone sell your shares right now, quick, right? And that was the sort of like prevailing mindset was very, very negative. Obviously, that was a huge mistake if you did sell shares at that point because we've seen even these companies are up somewhere in the range of, both MEG and Strathcona are up like 33% basically, right? 32%. Now, there's a couple of interesting dates that we should point out on here. We see both of these companies, both Strathcona and MEG. What date is this? We see this is the 15th, 16th of May. We see Strathcona and MEG, each of those shares jumped up, right? You see some interesting action, some more positivity in Strathcona in mid-June, and then they're kind of just sitting there and following a very similar pattern, right? Anytime you see them trading similar to Cenovus, you know that's just an oil industry pattern. However, something happens here in sort of not quite the middle of July, but in prime stampede season that I think is really interesting. Earlier, I mentioned how Adam Watrous had talked about a special dividend going out. Now, look at what that impact was on the Strathcona Resources shares. So they bumped up from up 20% to up 30%. It's 10% in a day. Basically because people are saying, hey, if there's no acquisition here, there's an arbitrage opportunity. And again, that's a lot of big investors have said there's not a lot of value for like a swing trade here because look at that. That's a single day. The opportunity's gone already, right? And people jumped in. And because of that, over the last couple days, and we've seen the story really play out over the last week. So let's call it somewhere between the 21st and 25th of June. In that time period, we saw this story mentioned a couple times. And we have seen a pretty clear run up on that green line in Cenovus shares, right? So they were up about 14%. By the end of the week, they're up 18.5%. So that's a 4% jump in a week, which is not terrible for a company like Cenovus. But we have also seen a significant drop over the last just day or two in MEG and Strathcona as we got these specific articles coming out on the 25th that were very much indicating that, yeah, Cenovus is actually going to do this. We had that RBC report coming out saying that they had asked for the money, indicates basically that it is a done deal. It is not just, oh, maybe that this has been leaked and it is actually happening. Now, obviously, I think the people that have the most to lose here from a business perspective, let's say, is Strathcona. They seem to be at a position where they, for the last several months, were the only ones offering extra money to shareholders. They're the only ones who are offering a premium. They're the only ones offering to buy those shares off you. And they already accumulated 10%. We have no idea how many they've picked up, but they were the only ones in the fight, right? They weren't competing against anybody. And that's beneficial for them. They don't have to pay a premium because there's no competition there. However, with Cenovus stepping into the field, all of a sudden there's this big question mark about, well, are shareholders going to get a better offer from Cenovus? And what impact is that going to have on Strathcona? Because if they do get a significantly better offer, they're going to take it. And you'd expect to see the stock price drop significantly. And to be fair, it goes from about up 34.5% to 32.2%. So that basically that 4%, the same thing that Cenovus gained in the last week, Strathcona lost. But they didn't lose anywhere near the totality of gains they made throughout this saga. And a big part of that is because of that special dividend, right? If you consider the fact that they were trading up 20% before Adam Watrous mentioned that at the Stampede, and the fact they're still up 32%, they're still up 12% even since he made that comment less than a month ago. That shows you that shareholders are down with whatever. They're really not that picky. Strathcona Resources is also quite an illiquid stock. I mentioned how this whole MEG Energy takeover is supposed to be part of their plan to make it a more investable asset from a big institutional perspective. They need a more liquid stock in order to have a better price, because otherwise they don't make it into some of these bigger funds. And despite the fact that this MEG Energy deal could transform the investment opportunity, just the possibility of getting a significant special dividend has kept the stock afloat. So we're likely to see a couple of things in the next couple of days. This is what I'll keep my eye out for. Recommend you do too. First, does Cenovus Energy put a deal on the table? Second, what is that deal like? Is it really good? Are we talking like a 30% premium? Because then you could expect MEG share prices to jump. Is it a 11% premium? Because then you can expect them to drop, right? If it's just a few percent different, yeah, they might outcompete Strathcona, but it's not that big a deal. If it's a significant amount different, then much bigger deal. How are shareholders getting compensated? Because that's going to be a huge deal for Cenovus shareholders. If you own Cenovus and you're already kind of wishy-washy with this management, and all of a sudden you see massive dilution coming on, well, now you have question marks. How accretive are these assets? What do the synergies look like? We saw Whitecap and Varen pull off quite a profitable merger in the last, year, let's say, and it looks good. From the one earnings we've got as a combined company, it looked good. A lot of positive signs, really positive momentum. Will maybe the Cenovus-MEG or Strathcona-MEG combo look as good? And so as a Cenovus shareholder, are you willing to take on that extra maybe debt or to take on that dilution in order to get those extra assets and have that extra opportunity? If it's debt, what does the maturity look like? How does it impact their existing debt portfolio? How do the cash flows from MEG Energy work towards covering that debt? Cenovus is not sitting on a giant pile of cash. What does it look like financially for them? How strong is their financial portfolio, and how much do you trust management? Because if you see Cenovus jump in at a really quite large, let's say, I don't want to say great because obviously it's subjective, but at a large premium to what Strathcona offered, do you see investors take it? How good is that for Cenovus investors? There's all sorts of storylines going on here. So if they do that, maybe there's a story. Maybe there's some sort of, explanation from them, and you'll see stock prices move pretty dramatically, honestly, one way or the other. I actually saw an interesting a comment that basically said that if Cenovus makes I'm talking a 30% premium offer, so they're offering 30% above where the MEG Energy shares trade right this second in order to try to outcompete Strathcona, that at least a couple individual investors think that the stock could drop to $10 a share. So there's big risk here if you own Cenovus, if this is a big part of your portfolio. And I know a lot of Canadian investors do because it offers such a great value from the perspective of pure assets. So really interesting storyline there. For Strathcona Resources shareholders, it looks like you got to win either way. Cenovus shareholders, there's question marks. If you're a MEG Energy shareholder, who knows, honestly. There could be a huge opportunity here. You could see a huge pop in the stock price, or it could be a big nothing burger. You see a huge drop. I hope, whatever position you've built in there, you have some sort of contingency here for whatever goes on. So that's about all my thoughts today. Let me know what you think about this developing story. I think it's so interesting to see. We have not seen this kind of animosity between investors in the Canadian oil space in a really long time, right? The boardrooms of Calgary love each other typically. So really interesting to see this go down. And yeah, are you buying this? Are you buying Cenovus? Are you buying MEG? Are you buying Strathcona? Right? Who's the winner in your opinion here, and how does that fit in your portfolio? Love to hear it in the comments below. As always, if you made it this far, you like the video, please do like it. If you like what we do here on the channel, please do subscribe, and I hope I see you in our next video.